and welcome. You tune into Market Fatafat. I'm Ankita Saxena and with me is Ashish Advari. In the next half an hour, we'll take you through all the stocks that are in focus, either on the back of news flow or on the back of technicals. But first up, let's take stock of how the market is shaping up at this juncture. It is a quiet day that's coming in. We started out decent, but we gave up all those gains. In fact, from the highest point of the day, Nifty is down 237 odd points. We are down 132 points right now. 0.5% downtick is what we see coming in on Nifty. 25, we are actually below the 25,700 levels also. So we are trading towards the lowest point of the day on the Nifty. Nifty Bank also ditto is following suit right now, trading with cuts of right now absolutely flat, but it is hovering around the lowest point of the day. In fact, from the day's highs, it's down 374 odd points. As far as the broader markets are concerned, if you can pull up the charts for Nifty mid cap and small cap, so mid cap is trading with cuts of 0.4%. Small cap is the only one that is holding out in the green. In fact, small cap is the only outperformer in the trade today that is trading up 51 odd points or 0.3% gain coming in on Nifty Bank. But let's pull up the sectoral charts then. As far as the sectors are concerned, we have Nifty Media and the PSU basket that is doing well. IT also very, very marginally in the green though. It is, holding on, LTI, Mindtree, Tech Emphasis, TCS, all of these are holding with gains of more than 0.5%. But Nifty Media is the one that's holding on to gains, highest gains. Rest of the packs are trading in the red with Nifty Realty and the Pharma pack taking the sharpest knock with the downtick of more than 0.5% or thereabouts. But as far as India VIX is concerned, that has also shot up as of now. It's up 1.3% and advanced decline ratio is now favoring the decline. So that's how the market texture looks like. It is a weak day of markets that is coming in. But let me get on board Osho Krishnan, who's the Chief Manager, Technical and Derivative Research, Angel One, who's now joining us. Hi, Osho. Thank you so much for joining us. Let's get going with the show then.
Well, yes, and this is a show where we discuss all stock-specific news flow. And first up, let's talk about TVS Supply Chain. And the stock is in focus today on the back of a big order that the company informed the exchanges about. The company said that they've received a 3-year contract from a global company to manage in-plant warehouse operations. In fact, the company also said that this is a 3-year deal to manage in-plant component logistics with a 700-member operations team. So that's a big order which the company has won, because of which the stock was gaining in trade earlier. In fact, it has inched higher in trade as we speak and is up nearly 3.5% at the moment.
All right, moving on then. Osho, you have picked out Bajaj Finance for us. Tell us on the charts, what do you see for Bajaj Finance? Because if you look at the chart, today it's down and out 1% or so. But, even in the last 1 month, it has been in a corrective phase. It's down 7%. So it's been in a consolidative phase. From here on, what are the levels to watch out for?
Very good afternoon. Firstly, thank you for inviting me at the show. Well, yes, no doubt we are witnessing a kind of a correction in both the Bajaj Twin companies, but Bajaj Finserv, to be specific, I'm having a kind of a bullish approach because the counter have seen a kind of a decent correction and is now hovering around the 200 exponential moving average. So Bajaj Finserv from here onwards is expected to kind of stabilize on the correction phase and can gain some kind of positive traction going ahead. So I'm expecting that the lower zone of 1970, which is yesterday's low, should be seen as a cushioning zone for Bajaj Finserv, and on the higher end, it might bounce towards the zone of 2050 on a very short-term perspective. And if it sustains above the zone of 2050, then from there onwards, one can look for accumulation purpose in this counter. The counter is overall on a broader time frame is at a very strong juncture, at a very strong support position, and I'm expecting that once the volatility in the market subsides, then we can see some kind of positive traction coming in this counter.
All right, so that's Bajaj Finserv on the charts, but let's move on to the next counter. TCS is the counter that is in focus now. That from the IT pack that is in focus on the back of its results, trading with gains of more than 0.5% right now, because TCS posted a largely inline set that came in. If you look at the numbers on a consolidated sequential basis, we have the revenue that saw an uptick of 2%. We have PAT that declined 11.6% at 10,700 crores. The EBIT margin was absolutely flat for the quarter, and EBIT came in with an uptick of 2% on a quarter-on-quarter basis. So largely inline set is what we saw coming in for TCS. Now, according to the press release, also they say that the AI services are now generating around $1.8 billion of annualized revenue, and that's up 17.3%. On a sequential basis in constant currency terms. They also feel that the revenue growth of 2% on a sequential basis in rupee, but in constant currency terms it was just 0.8%. That signaled the rupee strength. Also, they feel that the operating margin is stable at 25%, despite significant one-off charge that they had flagged earlier. Citi is maintaining a sell call, and they've cut the target price to 3,020 rupees on TCS. But TCS right now is in focus on the back of its results.
Okay, so TCS in focus on the back of its results. But let's also put the spotlight on some other stocks which continue to remain in focus, and something like Biocon on the back of their fundraising plans. Remember, the company yesterday informed the exchanges that they are looking to raise funds via QIP. The floor price of the same has been fixed at 387.74 rupees per share. Now, as compared to yesterday's closing price, it is at a premium of about 3 to 4%. And several reports suggest, although the company has not formally informed the exchanges about the quantum, but reports suggest that the company could be looking to raise funds anywhere between 4,100 to 4,500 crore rupees. So on the back of their fundraising plans, the stock is in focus. Biocon at the moment sitting with gains of nearly 0.7%.
All right, moving on. Osho, you picked out Balakrishna Industries for us. Very, very flat moves coming in today. But even in the last few weeks, in fact, it's been in a corrective phase for a while. What do you see on the charts for this?
Overall, no doubt the counter has been into a very strong correction zone, and from the zone of nearly 3,200, it has plunged towards the zone of 2,200. But looking at the historical trend, 2,200, 2,250 is a kind of a support that we have seen on the historical charts also. So I'm expecting that with the kind of stabilization near the zone of strong support levels, the counter is expected to provide some kind of pullback in the short-term period. On the immediate perspective, the initial hurdle for Balakrishna Industry is placed around the zone of 2,500, and once it breaches the zone of 2,500, then one can even witness some kind of a strong pullback in the counter. So this counter should definitely be in the radar list. If there will be any breakout or any move beyond the zone of 2,500, then we can see a decent movement towards the zone of 2,650 to 2,700 from short-term point of view.
All right, so that's Balakrishna Industries and the levels that you need to keep on your radar. But let's move on to another IT counter, HCL Tech, that reported its numbers. And in fact, HCL Tech came out with a better set of numbers above what we were expecting. A good quarter for HCL Tech as the IT major beat the expectations on revenue and the EBITDA and the EBIT front, while the net profit slipped due to new labor laws. Now, the deal momentum remained rather robust. That was led by AI contracts as management raised the FY26 service revenue guidance and stayed confident on the AI-led growth. Now, if you look at the numbers, we do see the revenue that saw an uptick of 6% on a sequential basis. EBIT margin that was up 133 basis points. And new deal TCV stands at $3 billion. That's up 17% on a sequential basis and 43.5% on a year-on-year basis, led by strong AI-led large deal wins. Also, the guidance in constant currency terms, the revenue guidance is between 4 to 4.5% versus an earlier 3 to 5% range. Also, the FY26 guidance for EBIT margin is between 17 to 18%. On the back of that, HCL Tech is in focus today, though it has given up all the morning gains.
Well, yes, so HCL Tech, TCS and the entire IT basket is in focus on the back of large cap IT companies reporting their earnings. But on that note, we need to slip into a very short break. We'll discuss many more buzzers on the other side. Don't go anywhere. Welcome back. You're still tuned into Market Fatafat, a show where we discuss all the stocks that are buzzing in trade today. And let's now put the spotlight on Canada HSBC. The stock is in focus. Remember, it is a recently listed counter and some percentage of their equity lock-in has opened today. About 4% of their equity was locked in, and that lock-in has opened today, and that is the reason we are seeing some bit of selling pressure on this counter. In fact, the stock is now down 3% on the back of this.
All right, moving on then to the next counter show that you have picked out for us. It's Equitas Small Finance Bank. Tell us on the charts, what do you see for this counter?
Technically, this counter is looking very positive. On the daily time frame chart, we are witnessing a kind of a flat pattern breakout in this counter, and I'm expecting that with the kind of momentum this counter is into in last 3 or 4 weeks, the higher target comes around the zone of 74 first target, followed by 78. So overall, the technical parameters are well aligned with the bullish momentum, and I'm expecting that in the short-term period, the counter can see a decent run towards the zone of 78. So one should definitely try to accumulate the counter at current levels. On the lower end, 65, 64 is a very strong support zone. So for short-term traders, it will be advisable to keep a stop loss around the zone of 64 for upside target of 78.
All right, moving on then to the next counter that is in focus today, and that is Kalpataru that is in focus. Let's take a look at why Kalpataru is in focus. Now, well, it has its business updates coming in, and it's a weak set for Q3 FY26. Now, the pre-sales is down 14% on a year-on-year basis at 870 crores versus 1,000 crores, last year. Collections are at 1,100 crores. That is up 17% on a year-on-year basis. And according to the highlights, the con call highlights, the management is confident of achieving full-year pre-sales guidance, and the first half typically accounts for 35 to 40% of the annual guidance. They say that the second half will be much better than the first half, and the construction spend in second half of FY26 is expected to be 1.2 to 1.3 times higher than the first half. So on the back of this positive commentary coming in, Kalpataru projects is up 0.8%.
Okay, so Kalpataru projects up 0.8% on the back of that. But let's also put the spotlight on Infosys, because after TCS and HCL Tech, Infosys is all set to report its numbers tomorrow, and revenue is expected to inch higher by about 1.6% on a sequential basis. EBIT margins this time around are largely expected to remain flat. As far as expectations are concerned, remember, revenue is expected to decline marginally. In constant currency terms, we are expecting a growth of about 1.5%, 4.5% on a sequential basis. Fewer billing days and no mega deals in the quarter gone by are likely to weigh heavy on earnings, but all in all, revenue is expected to inch higher by about 1.6% sequentially. Any kind of management commentary, especially on guidance, on demand trends, on Gen AI adoption globally, will be very crucial this time around. So all eyes on Infosys after TCS and HCL Tech, which reported largely in line to better than expected sell-off numbers.
All right, so that's Infosys. But Osho, you picked out Zomato for us, Eternal. On the charts, what do you pencil in for this counter? It's up and away 2.5% in today's trading session. Tell us what you see on the charts. What are the levels to watch out for?
Technically, there are few developments which are very positive for the counter. Firstly, after the correction from the zone of nearly 350 towards 280, 270 kind of levels, the counter have refilled the bullish gap on the daily time frame chart, and from there onwards, some kind of a stabilization followed by a buying traction is coming back in the counter. So I am expecting that even this level is coinciding with the 200 exponential moving average. So even from a long-term perspective, the counter is at a very strong support zone. So from here onwards, I am expecting that there might be a decent momentum buying in the counter. On the very short-term perspective, 300, 310 will be the first intermediate resistance or a target for a short-term trader. And once it breaches the zone of 310, then from there onwards, we can see the primary uptrend to continue on the higher end, and 335 to 40 will be the target from medium-term point of view.
All right, from Eternal, let's move on to the next counter. VATech Wabag, that's in focus on the back of an order win. Now, VATech Wabag has won a significant industrial water treatment contract from Bharat Petroleum Corporation Limited, or BPCL, with an order that's valued at 250 to 600 crore rupees. On the back of this big order win, VATech Wabag is in focus. Currently, it has given up those morning gains. It's still trading with gains of 0.7%.
Okay, so that's VATech Wabag for you. The stock is up 0.7% on the back of that news. But let's also take a look at what the market is doing at this point in time. Nifty is now down about 110 odd points as we speak. 25,680 is where the Nifty is currently trading. It has, of course, recovered from the lowest point of the day, but despite that, turning out to be a weak session on Dalal Street. Nifty Bank, on the flip side, is outperforming in trade. That, in fact, is in the green as we speak. Marginally so, but despite that, outperforming as compared to Nifty. Nifty Bank should come up for you on your screens. That one is up nearly 30 odd points, 59,476. So it is again trying to reach that 60,000 mark in trade. Trend, that one is down 3.5%, biggest loser from the Nifty 50 pack. L&T, Interglobe Aviation, Big Boy Reliance Industries, Dr. Reddy's, BEL, all of them declining in excess of 1% in trade today. On the gaining side, we have ONGC. That one is up over 3%. We have Eternal, ICICI Bank and Tech Mahindra on the gaining side, all of them gaining nearly 1 to 1.5% in trade today. Remember, Reliance Industries ahead of its results on Friday is gaining. Tech Mahindra, of course, will be reporting its numbers in the due course. So that one is up 1.5%. Hindalco, SBI, Max Health. These are also some of the other stocks that are gaining in trade today. From the broader markets, let's put the spotlight on Dixon Tech. That one is down in excess of 4.5% as we speak. It should come up for you on your screens. Remember, Dixon Tech, that one is under pressure. HEG and Trent also continue to remain in focus. But